I came into the market with $600 in 1968 and left it in 1980 with millions. Sometimes I won't invest in a country because I know it will change the rules on me. If there's one thing I've learnt in going around the world, it's that societies become rich, swagger around for a few years, decades or centuries, and then their hour is done. These are quotes from the book Investment Biker, written by Jim Rogers. Hello and welcome to this week's episode of IG's Trading the Markets. I'm Victoria Scholar. Legendary investor Jim Rogers retired at age just 37. In the 1970s, he said he made, quote, more money than I know existed in the world. But his true passion, in fact, is in motorcycling. So in 1990, the Wall Street heavyweight embarked on a 65,000-mile motorcycle journey over 22 months with his girlfriend to explore many of the emerging markets. And he documented his trip in his book, Investment Biker, Around the World with Jim Rogers.
Well, I guess the best lesson is you better see it for yourself, because if you go and you see for yourself, you will be able to make much better investment decisions and economic decisions. The most important word is perseverance. Don't ever give up if you want to get something done or if you want to achieve something.
He's earned himself the nickname the Indiana Jones of finance, and this book was voted among the top 10 investment books by IG clients. I'm pleased to say that I'm joined by the man himself, Jim Rogers. Jim, great to have you on the podcast. Tell us, why did you decide to go on this journey and why on a bike?
Well, Victoria, I guess I'm a little nuts. All my life, I've wanted to see the world, and I had motorcycles from an early age, and I know that motorcycles are extremely exciting and fun, and so I decided I wanted to see the world by motorcycle. That would be the very best way. It took a while to get permission. Those were the days of Red China and the Soviet Union and the Iron Curtain and all of that, but I finally got permission, and off I went. It was a lot of fun.
So this book is partly about your own personal journey and also about the economic lessons that you learnt along the way. So what's the biggest lesson economically that you took away from your trip?
Well, I guess the best lesson is you better see it for yourself, because the world is full of false propaganda and people who don't understand, who have an axe to grind one way or the other. If you go and you see for yourself, you will be able to make much better investment decisions and economic decisions.
And what about the personal lesson? What would you say that you learnt about yourself?
Well, I think probably the most important was, and I knew this all my life, that if one wants to do something, you better persist. I'm trying to teach my children the most important word is perseverance. Don't ever give up if you want to get something done or if you want to achieve something. The world is full of smart people who are not successful. The world is full of educated people who are not successful. The world is full of beautiful people who are not successful. Talented people who are not successful. The people who are successful are the nuts who just never give up.
Now, you're a believer in the free market, or the Austrian school of economics, and that was one country that you managed to stop by on your travels, Austria. So you've talked about how if you believe in an economy, you should take an indiscriminate approach when it comes to investing, buy shares across the board if you believe in the strength of that economy and the potential growth there. So tell us more about this approach and how it's worked for you.
Well, as most of us know, certainly from experience, that when a country or an economy gets strong, and nearly everybody benefits, and when the stock market is strong, nearly all stocks go up. Index investing is something we all are familiar with now, ETFs, etc. So that has been proven or demonstrated over and over again. In fact, index investing outperforms most investors, professional and amateur, over and over again. So buying everything is often a good approach. If you're a great stock picker, of course, pick the stocks. But most people are better off just buying the index.
So talk to us a bit about your time in China, because I imagine this is probably one economy that's changed the most from when you were there in 1990 to now. An interesting part of the book was how you saw this major road construction between Pakistan and China, and that was driving up the price of cashmere. What's the lesson you're trying to impart there?
Well, the main lesson is that when there's a change, especially if you find something that's very cheap, you can make a lot of money. There are great opportunities, and that was an example of a big change. That part of the world had been totally closed off for centuries. All of a sudden, there was a highway between China and Pakistan, and a highway which would connect, Karachi and Beijing if you wanted to go to the full length. So that would mean new opportunities for everybody. And when you find a big change in something that's cheap, that is an extremely good way to get successful.
So do you think China is likely to be the place that has changed the most over the years?
Well, over those years, yes. I first went to China 35 years ago, and my goodness, it's not the same country. It's not the same world anymore. Since 1990, certainly, there have been dramatic changes. Soviet Union fell apart, et cetera, Vietnam. But basically, China has been the biggest change in those years.
Now, Japan was another country in Asia that you managed to visit, and there was an interesting bit in your book about how you used the price of a membership to do some economic analysis. This was a golf membership, to be specific. So, can you tell us about that?
Well, as you may remember, in 1990 or 1990, Japan was in the middle of a gigantic bubble. I mean, stocks were so. The stocks market is down nearly 50% since then. That's 29 years ago. So you can see what kind of bubble it was. And property, including golf memberships, was selling through the roof. Everybody thought there was nothing would ever decline in value in Japan, and golf memberships were one indication of what was going on. I mean, the golf membership sold for more than a car, more than a house in most of Japan.
So I imagine, thinking of the way you like to invest, Japan's probably a country that you'd probably steer quite clear of.
Certainly in those days, no, I was short Japan before I started the trip. I've owned Japan since, but the Japanese stock market went down, 80-90% since then. It's up now, but it went down a great deal.
Now, there's an interesting bit in your book about inflation and devaluations, and you're talking about the car market as the example. Tell us about why you say currency deflations create a never-ending vicious cycle, to use a quote from your book.
Well, it's fairly simple. Economic history shows you that throughout the history of the world, we've had, or of any country, we've had periods when things are great, prices are rising, especially if central banks are printing money or governments are spending money they don't have. We've also learned that when things go wrong, prices collapse, especially if things get to, we just talked about Japan, how the stock market was a bubble and it collapsed and prices are down a lot. That happens to just about everything. I mean, a few years ago, oil was selling at nearly $150 a barrel. It's far, far down from that now. So we've had great cycles, always caused by supply and demand. And when the demand goes up and there's not much to supply, the prices go through the roof, turns into inflation, especially if governments print and spend more money. And then they go down again when there's excess supply.
So another interesting story in your book is about when you enter a different country, you like to find the black market to perform a currency exchange, and then you'll go to the bank and do the same thing, and that will teach you something about the level of corruption. So tell us what you did and what you learned and how you thought about this idea as well.
Well, there's not always a black market. If there's a black market, that immediately tells you there's something wrong. It doesn't tell you what's wrong, but it's like taking your temperature. If you have a fever, you know something's wrong. If you have a high fever, you know something's seriously wrong. Likewise, if there's no black market in a country, that means that's one thing that's not wrong. But if there's a black market, you know there's something wrong. The black market will tell you how extensive the problem is. If there's a huge premium, and I go to the bank to change money so I can find out what the normal rate is, and also to see what real money looks like. Because on the black market, you might get counterfeit. You might get paper money that's not real. So I'd like to get from the bank, A, the real rate, and B, the real money, so that when I meet the black market, and I assure you, Victoria, when you go to a country, the black market will find you. You don't have to find the black market. If it exists, they will see, there's strangers in town, foreigners in town, let's find them. and then you know what comes next. You change your money, but you have to make sure you're not getting counterfeit money as best you can.
So Argentina was an important country for you, and it really helps the reader to understand your investment criteria, because you said it fits with your goal in the sense that you see change on the horizon and investments are still cheap. So is that what you look for?
Well, let's go to any country. Let's not specifically talk about Argentina. There are countries now. Argentina now might be a good one again, but many countries get into trouble throughout history. Because of deficit spending or money printing or all sorts of reasons, they get into trouble. And when they do, you usually have inflation, sometimes rampant inflation. Values go down for stocks and bonds and other things. That was the case in Argentina then, and now for that matter. But if you see politicians and bankers, central bankers, trying to correct things, it usually leads to a great opportunity. You know, the world is full of it. History is full of it. That when you find a country that, and by the way, Venezuela right now, for instance, may be a good example of this. Venezuela is a catastrophe. It's totally collapsed. I would like to invest in Venezuela, but I'm an American, so I cannot because of sanctions. But I have learned that when a country collapses, such as Argentina had done then, and if you invest, you normally will be okay in 5 or 6 years. In fact, you might make a lot of money. And there's certainly examples of that around right now, Argentina and Venezuela being two of them.
Now, you've also expressed your views on business schools in the book. Is it fair to say that you're slightly sceptical of some of the finance that's taught in business schools, and you very much like to take your own approach?
Well, it's certainly fair to say that. There's no question about that. I was a business school professor for a while, and I was astonished at some of the things the students were being taught. They had all sorts of things that I, at least in my practical experience, knew probably were not so good ways to invest. My way to invest is to find out what's really going on, do analysis. But in business school, they teach you things like alpha and beta and all sorts of things that may or may not have some relevance to buying and selling good investments.
Now, you talk a lot about buying low and selling high and really understanding the fundamentals of supply and demand. Talk to us about why this is so important and often maybe overlooked by many investors.
Oh, Victoria, nobody has been able to repeal the laws of supply and demand. Many countries, many politicians, many philosophers have tried. The communists certainly tried to repeal the laws of supply and demand. But if there's not enough of something, the price is going to go higher. And if there's too much of something, the price is going to go lower. If you have too much supply and not enough demand, I assure you the price is going to go down. Forget all the theories of business school or philosophy or anything else. If you can understand what's happening with supply and demand, you're probably going to be successful.
Now, you've also talked about the importance of staying to the sidelines when you're not sure, not just trading for the sake of it, not investing when there's no opportunity there. Why is that lesson so important for you?
Well, one of the things that successful investors do is nothing most of the time, or a lot of the time. Let's put it that way. I have learned that if there's nothing to do, don't do anything. Just sit and wait, because there'll be plenty of opportunities coming along. And if you have an investment, it may be good to sit and wait, too. Wait for the investment to mature. Wait for the stocks to go higher and higher and higher until supply and demand get out of whack again, and then you sell. No, that's the kind. Now, I'm not a short-term trader. There are a lot of great investors who are terrific short-term traders. I am terrible at it. I may be the world's worst. My way is to find something cheap where there's change taking place, and then to invest and wait for it to mature and go up. And if you get that right, it may go up for years, decades.
Now, finally, you had a rather terrifying experience with some elephants once in Zimbabwe. Tell us what happened there.
Oh. Well, yes, we we were camping one night in the outback, but near the jungle. Lots of Zimbabwe was a jungle in those days, and we heard some elephants. We went out to see them nighttime by the moon, and lo and behold, something spooked the elephants, and they started charging. I thought it was all over. Fortunately, for some good reason, the elephants split and didn't run us over. They avoided us, but it certainly was a terrifying few seconds.
Jim, thank you so much for your time. Great to chat with you.
My pleasure, Victoria. Let's do it again sometime.
Let's.
Thank you.
That was legendary investor and author of Investment Biker, Jim Rogers. Thank you for listening to this week's podcast, IG Trading the Markets.